With all the excitement that's been surrounding the semiconductor space and companies like NVIDIA, one of the companies that has been pushed to the side has been AMD, or Advanced Micro Devices. Certainly some of this has to do with macroeconomic conditions that have affected the company. However, AMD has also not strategically placed themselves in a very good position over the last couple of years to capitalize on the growth in the semiconductor space. So today we're going to be looking into how all of that could be changing over the next couple of years for AMD and how now could be a very interesting time to look further into this company. As always, thank you guys so much for the support on the channel. I really do appreciate it. If you enjoy these videos, drop a like down below, subscribe for more content like this, and certainly leave a comment down below letting me know what other beaten down companies are you looking into. Before we jump into AMD, let's take a look at the YouTube portfolio. Right now, the current value of the account is $59,088.92. And I currently don't own any AMD shares, but I do own Alibaba, Google, Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. My top performing companies in this portfolio have been Palantir up 720%, Apple up 405%, and Microsoft up 308%. And there's only been one stock that I've really added recently, and that has been Google. I bought 5 shares. I'm up only around 3.5%. Right now, I think the market and valuations are relatively high. Google has been one of the few big tech companies that seems to be still sitting at a low valuation. However, AMD, as we'll come to see, could potentially be at a low valuation as well and might be one to look at adding to the portfolio. Year to date, AMD is up only 0.01%. So basically over the course of the last year, the stock has traded flat. However, during that time period, it did hit an all-time high of around $210 per share. From that point, however, the stock has fallen by almost 35%. Keep in mind that a stock has to go up by a higher percent than it fell to get back to the same price level. What that means is for AMD to get back to $210 per share, it needs to actually go up by around 50%. And this has been a very consistent trend that we've seen from AMD over the last 5 years. In 2020 into 2021, we actually saw the stock price fall by around 20%, followed by a move up of around 100%. Then in 2021 into 2022, we saw the stock again fall by around 60%, followed by a run up of around 100%. In 2023, again, a drop of around 20%, followed by a run up of around 100%. Here today, we are seeing a drop of around 35%. Could it be followed by another run up of around 100%? Only time will really tell. And today, we're not only going to look at the good things going for AMD, we're also going to take a look at some of the risks that come along with this company. One of those being the war going on between the US and China when it comes to trade, especially around semiconductors. And over the last few months, we have seen the US implement some restrictions around what exactly could be sold to China, especially when it comes to AI chips. And now we are starting to see China fight back. They have announced that they are banning exports to the United States of some critical minerals that not only affect semiconductors, but also have military applications. And they are now taking aim at some companies within the US, specifically blocking chip purchases from Micron, as well as discussions around potential blocks on Intel. So obviously this trade war could have a big effect on AMD's business, restricting who they can sell to outside of the United States. And this is something that a lot of lawmakers I think will have to figure out over the next couple of years, because I think these restrictions overall are bad for the technology, clearly bad for these companies, and there needs to be a better understanding of what exactly this AI technology can do in the future and whether it really has that big of an impact, because I firmly believe that over time these countries are going to get access to these technologies. It's just a matter of how long does it take. And I think they're grappling right now with just trying to be the first one to have these technologies and advance faster than the rest of these countries. And I think that's the problem. But over time, as people build out their infrastructure around AI, I think that there'll be a little bit more relaxed laws around what can be shipped where. However, However, something that hits a little bit closer to home for AMD and they have a lot more control over is demand for their AI chips. AWS has not yet decided to offer access to AMD's MI300 series chips, primarily due to a lack of substantial customer demand. It's obviously not great to have one of the largest players in AI and cloud saying this about your product. Jody Hutt, the senior director for customer and product engineering at Amazon's chip unit, gave the following statement: "We follow customer demand. If customers have strong indications that those are needed, then there's no reason not to deploy." Obviously, what we have seen over the last couple of years is a ton of demand specifically for NVIDIA's AI chips. I think what's going to happen over the next couple of years is as some of these other players start getting into this market, like AMD, like Amazon, as well as a number of others, they're going to have to offer their services at lower price points to start attracting some of these customers. And overall, we'll have to see how this impacts the chip market as a whole. I think it's going to have a big impact on NVIDIA and their numbers because they could potentially start losing market share to companies like AMD if they don't start reducing their margins, while AMD is willing to take that smaller margin to really get their foot in the door. And Cathie Wood sees this as a big impact for AMD. She actually purchased around $22 million worth of AMD, or 155,000 shares, through her ARK Invest fund. And this has been a consistent buy for Cathie Wood over the last couple of years. She started buying back into this company in 2023, buying heavy throughout the year. She did end up selling out of a portion of her position in February-March timeframe of 2024. However, more recently, she's started buying back into this company. But keep in mind, it's a smaller position in her ARK Innovation ETF, number 25 on the list, making up only 1.31% of the fund. But as I always say, don't buy a company just because someone else did. Make sure you are buying it for the right reasons. And often the right reasons are around where you think the revenue and EPS numbers are going in the future. And AMD reported their most recent earnings back on October 29th. They came through with an EPS number of 92 cents and a revenue number of $6.82 billion. In terms of their top line revenue of $6.8 billion, that is up around 17% year over year. Their GAAP EPS number came through at 47 cents, again compared to their non-GAAP EPS of 92 cents. But the most standout statement for me came from their CFO, who said, "We are on track to deliver record annual revenue for 2024 based on significant growth in our data center and client segments." They saw record data center revenue of $3.5 billion, up 122% year over year. They also saw their client segment revenue grow to $1.9 billion, up 29% year over year. Obviously, this will have a huge impact on their business because this $3.5 billion is around 50% of their total revenue. And by next quarter, if it continues growing by 25% quarter over quarter, it could be sitting around $4.3 billion. And this could be a huge growth vector for AMD over the next couple of years, because over the last couple of years, their top line growth has been very slow, especially compared to 2021 and 2022, where they were growing anywhere from 30% all the way up to 100% for their top line year over year. And we know that these data center chips have very high margins. We have seen this with NVIDIA, and AMD really needs to get higher margin products in the door because they have seen a slump in their EPS numbers. Their current trailing 12-month EPS is sitting at $1.12 on a GAAP basis. When we go back to the end of 2021, they were sitting around $2.50 of trailing 12-month EPS. So it has fallen significantly over the last couple of years, and these data center chips could really help propel them back to these levels. If you're wondering why I kind of ignored this all-time high of $3.25 for the GAAP trailing 12-month EPS, it's because it considers this one quarter where they reported $1.47. $1.06 of this is because of an income tax benefit of $1.3 billion that they had during that quarter. So I think that discounting this is probably fair because that is a one-time event. So I think it's a lot more realistic that AMD over the next couple of years try to aim to get back to that $2.50 mark rather than that $3.25 mark. And again, the way they really improve these underlying metrics is going to be by focusing on their data center segment. We talked about that 122% growth year over year. That was growing from $1.6 billion in 2023 to $3.5 billion in 2024. They also saw their operating margin increase from 9% 19% in 2023 to 29% in 2024. So the business is growing as well as becoming more efficient over time. And this growth of data centers is reflected in their fourth quarter projections as well. They are expecting that fourth quarter revenue will come in around $7.5 billion plus or minus $300 million. This is growth of around 22% year over year. So they're anticipating that their revenue growth will actually accelerate over at least the next quarter, if not the next couple of quarters. And analysts are starting to pick up on this as well. For 2025, they're expecting revenue of around $32.58 billion. That will be up almost 27% year over year. I honestly think that this 27% number could be low. We could see 40 to even 50% revenue growth year over year in 2025. To put 50% growth into perspective, that would be a yearly revenue of around $38.5 billion and a quarterly revenue of around $9.6 billion. And ultimately, this should help profitability. Analysts in 2025 have an EPS estimate of $5.11. This is on a non-GAAP basis. On a GAAP basis, we are seeing that number be about half. So I'd expect this to be somewhere around that $2.50 mark that we were trying to see AMD get back to. And right now, price targets, in my opinion, are a little bit low. The average price target is $185 per share. The low price target is above the current price at $146 per share, and the high price target is around $250 per share. So it appears that no matter what, analysts are thinking that this stock is going to go up, even for the low price target. And right now, the forward P ratio for AMD is sitting at 27.86. In my opinion, this is probably reasonable for a company that should grow their top line anywhere between 25 and 50% next year. So AMD is a company for me that I'm going to have to consider adding to the portfolio. I haven't quite yet as of making this video, but as I look at more of this data and go over it, I think it's more and more attractive. The company over the last 5 years has gone up by 250%, but I think that they're just breaking into this data center market, and that has a lot of upside potential, not only for their underlying numbers, but also for the stock price. But that's just my opinion. Don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what do you call a snowman on the move? Check the comments down below for the answer. Thanks for watching.